I don't think he needs an introduction. John's back again. I'm going to turn it over to John. I'm really looking forward to this presentation.
Thank you. Yeah. Howdy, y'all. Howdy, y'all. There we go. There's something. So we're going to talk about a brief history of today's fintech, and also talk about the now of fintech and where it sits in community banking. I missed my introduction, so by way of introduction here on the slides, I'll show you. I have a 3-year-old, a 10-year-old, and we don't know how old that dog is. We adopted him last year. He's an elderly pup. His name is Nigel. And then my beautiful wife, Brooke, she allows me to go around and do all this fun stuff. She actually has a startup that's launching their app this week. And I was telling somebody last night, this probably tells you something about our relationship. She's launching a dating app. That's real. And then for fun, I actually find music that has never been released, that was recorded from the 20s to the 70s, where the owners, the artists, are no longer around or unable to be captured, and I release it on my music label called Preservation Project, and save the royalties for the artists and their families should we ever find them. I do work with a group called Kasasa. There's about 450 of us back in Austin, and also we have an office in Boca Raton. I do get to do a decent amount of speaking, and one time I wrote a book. It was about community banking and fintech. It came out in 2016, and if you read the book, it's, well, then you're my mom. If you didn't read the book, honestly, many of the things from that book, we'll talk about some of them, they're still relevant today, even though the book was published right at the end of 2016. But I'd like to take a step here and talk about modern fintech. Modern fintech started essentially with PayPal. PayPal, of course, the merger between PayPal and X.com happened in '99, and there's one of the first real success stories of an internet company that said, we should be able to transmit money across the internet the same way and with the same pricing as sending an email. And of course, you remember who started that, our friend Elon, who everyone loves to talk about. On the left-hand side, though, anybody know the guy there on the left-hand side, the other co-founder of PayPal? You could shout it out. That's Max Levinchin. He started what is today the company called Affirm. Affirm it's a couple billion-dollar fintech company that if you were to buy one of these awesome, trendy mattresses, have you ever heard of Casper.com or seen these mattresses advertised on Facebook or Instagram or anything? If you throw a mattress in the shopping cart, Affirm determines whether or not you're a good credit risk. And instead of you pulling out your credit card, we'll say, we've already determined that you can just make 12 installments of $131. Click this radio button to pay with Affirm. You don't have to fill out any forms or anything else. So it's essentially lending in a shopping cart online without you ever having to fill out any information. And then, of course, a few years later, you had Mint.com, which today is owned by Intuit. Many of us are familiar with Mint, of course, because it is the company that allows you to visualize all of your banking relationships in one place. And then around 2007, Lending Club hit. Lending Club was one of the first apps on Facebook. If you remember, Facebook opened up their platform and said, hey, now we can have Farmville. And one of the other apps at the time was Lending Club. Lending Club, of course, is this idea where consumers could put their money at risk and earn a higher rate of interest on their money, lending to somebody they don't know. Lending Club would facilitate that transaction, and someone could borrow money potentially at a cheaper rate than your institution might lend it to them. It was a really smart idea. However, Lending Club didn't really have too many parameters on how you got your loan or what your risk was. The way they determined your risk was really simple. It was whether or not you paid your monthly phone bill on time. That was their start, and it was very effective. Today, they're a multi-billion-dollar company. Of course, we all know Prosper. Prosper went through some SEC issues, but around 2008, 2009, they had come out of those, and Prosper is pretty much the name in town when it came to peer-to-peer lending. And also around that same time was Credit Karma. Credit Karma allowed you to visualize your credit score. If you notice a trend here, a lot of these FinTech companies that are still around today got their start right at a very particular time in our industry, right? When people were a little frustrated with the way that things were going in the banking space. And so today, now you have, as I mentioned earlier, 12,000 FinTech companies globally. I like showing this slide, even though the slide has been shown at probably every FinTech conference under the sun for the last 6 years, but it illustrates something very succinctly. On the top half of this slide, you see Wells Fargo's personal homepage, their retail banking homepage. And on the bottom is their small business homepage. Now, each one of these logos that's around the screen are FinTech companies. Some of these FinTech companies are worth tens of millions of dollars. Some of these FinTech companies are worth tens of billions of dollars today. And each one of these logos has an arrow pointed to an aspect of Wells Fargo's business that company is going after. It's just a nice illustration to see that no segment of banking is safe from FinTech. About 18 segments of banking have 12,000 FinTech companies, and that doesn't include insurance, which has its own world, an own industry called InsurTech. That's also disrupting insurance. Well, not only do you see this pressure from 12,000 new competitors, but then you have the big banks essentially saying, goodness gracious, these competitors are going to eat our lunch. And so this is why you have Jamie Dimon on investor call after investor call rationalize the $10 billion a year that he's been putting in the last now 3 years. This slide says 2 years, but in 2018 they recommitted another $10 billion to buying FinTech companies and growing them inside of JP Morgan Chase, also maybe just buying them and shelving them. Now, if I was on stage last year, I would have said, wow, look, it's a record year for investment in FinTech as we reach about $28 billion for the year. That was 2017. As you see this year, already we've almost eclipsed $60 billion in the first half of 2018 for investment in these companies. This, of course, does not include the friends and family rounds and all those small micro investment rounds that happen as these startups get going. So, of course, whether you're at a conference like this one, you see a guy like me standing on stage, or these guys talking about financial technology, or you read the paper and you see that there's $60 billion invested in these companies, or you listen to a podcast and there's several of them that talk about the future of banking, more often than not, they either leave out community banks or they specifically say community banks are gone. They are going to be erased from this planet within a short period of time, and the reason is very simple. FinTech companies do not have the legacy infrastructure, the legacy branches, the legacy thinking, the legacy culture, the legacy things that may hold community banks back. And that's the thesis point for most of the articles that you read about this stuff, is that FinTech companies are built on new technology, new thinking, new infrastructure, data, and community banks aren't. And since I've been talking about FinTech now on stage, which is since 2005, I gave my first presentation to a group of bankers in Hawaii. It was a national conference, and the title of my talk was "A Tsunami of Change is Coming." Pretty apropos for Hawaii. But since that time, the reaction from community banks has pretty much been this: it's interesting. Look at the room. Let's go talk ag. I'm not blind to what matters to people. But I will tell you that community banks over and over and over again, this has been the response. And when you look at or you talk to community banks, it's not uncommon to hear this. Oh, that FinTech thing, it's just an app to round up your spending and put it into an investment vehicle. That's not real banking. That FinTech thing, it's just a prepaid card. It's not backed by the FDIC. No one's really going to do their banking with that. That thing's just for the kids. We're kind of more of a boomer bank. That thing is just a debt refinancing tool. We don't want those kinds of people in our bank. That thing is just. And my caution to you is it's justing ourselves right out of business. And I've got this fun statement here that it's always just one thing until it ain't. And I will show you a simple chart. I built this for you guys because I thought maybe this would be illustrative in nature. The top row there, you see a variety of FinTech companies, starting with the one that we mentioned first, PayPal. Then you've got Square, SoFi. Of course, everyone in here should be familiar with SoFi by today. They started in 2010 refinancing student loans digitally, and today, we'll talk more about them, but they offer most products and services. And then you got Marcus from Goldman Sachs, of course. Marcus was launched in 2016 as Goldman Sachs digital bank, and Ally, Google, Facebook, Apple, Amazon, and then you have a few logos that you might not recognize. N26 is a challenger bank from overseas. Monzo, Revolut, same deal. These are banks that were, think of them as de novo style banks that followed a very specific process that was built over there by it's a framework that was designed so that new technology-oriented banks could be built to compete against the existing framework of building societies, credit unions, and community banks that exist, and big banks that exist overseas. And then you have Ant Financial, which we'll talk to you. And then here on the rows, you see all these very typical products and services that we may offer, and you see some checks. The checks are the things that these companies have mostly offered, and everybody knows them well for. And no wonder in community banking space, whenever you look across the multitude of the products and services that this smattering of fintech companies offer, no wonder we don't care that much. It's mainly P2P, sending money, peer-to-peer. We don't make any money that way. Who the heck cares, right? Now, what I'm about to show you is a change to this slide, and it works like this. There's going to be flags up there, and each flag will mark where these companies have said publicly that they are rolling out with those products and services in the next 12 months. Here we go. Boom. It's always just one thing. It's just this one thing until it ain't. And I didn't just cherry pick which fintech companies were suddenly going to be rolling out things. This is what you're seeing across the entire world of fintech right now. They started as this one thing, and now they're expanding way beyond where they were. And so they're moving from this idea of this cute little disruption thing to true distribution. PayPal, of course, earlier this year announced that they're going to have FDIC-backed checking accounts. As you read the detail on that, what you find is it's delivered through 4 community banks who want to remain nameless. Probably a smart idea, those community banks. But this is how PayPal is now offering FDIC-backed checking. Acorns, known to the world mostly as that cute little app that just rounds up your change and puts it into an investment account, a couple of months ago said, oh, now we're going to offer a debit account called Acorn Spend. And within 4 days, Acorn Spend sold out of 100,000 accounts. 100,000 people signed up for that cute app whenever they turned on essentially a checking account. So much so that they had to turn it off, and now they're going back and saying, okay, now we're offering it to more and more people. Vero Money is a digital bank here in the United States. A digital what, John? I didn't think they exist. Vero Money, you can download it right now. Vero is right there on your phone. It's essentially a checking account in your pocket. It takes about 3 minutes to open the account. Chime has over a million accounts, 1.7 million accounts to be precise right now. And Chime started again in 2016. And they as well are a digital bank in your pocket. Marcus, I mentioned earlier, this is Goldman Sachs. You may remember they ended up in a little bit of hot water a while ago, and they were forced to essentially buy a bank charter to balance themselves out. And Goldman waited a little bit. They said, well, instead of rolling out a whole series of branch banks, let's do a digital bank, which they did. They launched it in 2016. By 2017, Marcus sent inside of the year 2017, sent 180 million pieces of direct mail for Marcus. And so Marcus today has some $20 billion in deposits, and all they offer is something very simple. They offer a digital loan, or you can throw some money in a CD or a savings account. SoFi, of course, started as that digital lending, digital refinancing of student loans specifically for Stanford and then Ivy League schools, and then they got a little bit broader and focused on millennials, subset of millennials. And SoFi now, as of 2 weeks ago, has rolled out SoFi Money, which again is a checking account. So SoFi now offers refinancing student loans, mortgages, credit cards, personal loans. You get the idea. And then not to be left out are the big banks. Chase is saying, oh, we want to be a digital bank too, so of course they roll out Fin. Then you've got Greenhouse from Wells Fargo, and Citibank, the big Citibank, has said, well, we got something too, we just don't know what it is yet. And then, as I mentioned, there are challenger banks. Now, there's about 15 or 16 challenger banks in the UK today. 3 of size, meaning they have millions of consumers, are now headed here to the United States. And one of those, of course, is Monzo. Monzo is, as you can see there, it's a digital banking product, and they are actively looking to buy a community bank or partner with a community bank and essentially rent your charter. Revolut is another example. Revolut will be here in the United States sometime towards, I presume in the next month or so. This is personal and business checking accounts and savings accounts, and they're getting into loans as well. They have over 5 million account holders today. They're in about 15 different countries. And it's not just the small guys and the big guys and then, oh, you know, these guys from overseas, but it's also now the digital giants. As Ron had mentioned earlier on our panel, he had talked about Apple and Facebook, and, you know, there's also Amazon as a great example, and Ant Financial, and we'll take those two real quick. So in 2017, Amazon, or rather, in 2017, millennials were asked a very broad but simple question. Hey, name the one app that you can't live without. Now, what you see up here is a smattering of apps, and some of you might be going, John, we all know they love Insta. We know they love Snap. You left those out on purpose. No. Actually, they were so far down the chart that they just didn't fit on my pretty slide, so I didn't include them. The most important thing to note here is the millennials said Amazon. Amazon is the #1 app you can't live without. Why? Because you can do anything with it, right? You can listen to music, you can buy music, you can watch shows, you can order underwear, you can do whatever. So millennials aren't as smart as we thought, or aren't as dumb as we thought they were. Amazon's a smart choice. Now, here's the fun part. Amazon, of course, started to come around, there started to be some news that Amazon's gonna be coming out with checking accounts and savings accounts. And then before you knew it, it was phrased like this from Amazon. Oh, no, we're if we do something, it's only gonna be go after the unbanked. Don't worry your pretty little heads, community bankers. We're going after a segment you don't want. And then whenever you get into the data, you find out that over 50% of millennials are quote-unquote unbanked. Well, there you go. So millennials really like Amazon, and Amazon chooses to like millennials. Pretty smart idea. Now, I was on a panel, not this panel obviously, but a panel a few months ago, and I was sitting next to a fellow where he said, Amazon will never get into banking. Amazon is just never going to touch banking. And I almost stood up and took my chair and hit him over the head with it. Amazon's been in banking since 2006 in the United States. They have about 15 different products and services that are in and around banking and financial services, so we cannot get it twisted. Amazon is a competitor. And of course, checking accounts and savings accounts haven't rolled out yet from Amazon. Why would they offer a checking account? They have 250 million reasons to do it. It's that little thing called interchange, the way you make money on the swipes. Amazon hates paying that money inside of its ecosystem, right? So they have $250 million a year that in their mind just get wasted. It gets sent to guys like you and your processors, and they don't really want to spend that money anymore. But it's not just about checking and savings accounts, and this is a pretty interesting study. This was February 24, 2018. I'll give you new data here in a second. This was where where consumers were asked, would you use Amazon as your primary checking account? And the people who said yes in green there, those are people who said yes and have a Prime membership. I'm not going to ask you to raise your hands if you have a Prime membership. It's probably everybody in this room. About 120 million Prime members in the United States, which is essentially every household. But if that doesn't give you pause, guess what? Bain came out with a study about 3 weeks ago that said 70% of consumers who have Prime memberships will use Amazon as their primary checking account should Amazon offer a 2% cashback reward on the checking account. That's all it takes. But again, it's not just checking. Let's look at personal loans. Look at that. 58% of people, oh, John, we don't deal with personal loans. Okay, fine, banker. Auto loans, we don't deal with those either. Okay, fine, banker, but look anyway. Pretty important, right? Now, here are the different products and services. There's only 4. Some really important products and services here. You can, if you're an unbanked customer, if you're somebody who doesn't have a bank account today and all you do is transact in cash, you can get your money into an Amazon account instantaneously through 11,000 locations, 7-Eleven and convenience stores all over the U.S. So whether you're unbanked or you're super banked and you want a killer rewards card, a credit card, or any number of other products and services, Amazon's already there and they're already competing against you. But you say, as a bank, you say, but we really care about small business lending. Cool. Well, here's something that Amazon's been doing since 2012 called Amazon Lending. Amazon looks at the data if you have small businesses who sell through Amazon, which many of us do and bank, and that's their primary channel. They sell through Amazon. Amazon looks at that data. Amazon looks at the reviews from the customers. Oh, 5 stars, I really liked it. And Amazon can determine when that small business needs a loan and will offer that small business a loan through a drop-down. Guess what? The small business doesn't have to fill out forms, doesn't have to present a bunch of documentation to Amazon. Amazon's already figured out whether or not they're a good risk and proactively offers them money through a drop-down. The money can be in your account tomorrow or today if you really want it then and you want to pay for it. So they started this, several years ago, and one of the great things about Amazon is they do small tests, right? That's how they learn. They test, they learn. They do things small. And so today, as of the end of 2017, Amazon has done $3 billion of lending to small businesses through Amazon Lending. Many of you might go, well, that's not that big. $2 billion of that $3 billion was done in 2017. The year. So they slowly ramped up, they tested, they learned, and I could see them being a real threat for those of us in the future. If you offer auto loans of any type, you might be interested that Amazon has vehicles on Amazon. It's actually a pretty cool thing if you're shopping for a car. You go and you can go to, I think it's vehicles.amazon.com. You can check out your vehicle. You can clearly see the one thing that's missing from this page is finance it or buy it. Do we really think it's that far away? And Amazon this year has made a lot of headlines in who it's hiring. It's hiring very prominent mortgage executives from prominent banks around the United States. Now, Amazon, of course, is a for-profit company, so do we think Amazon's hiring all these expensive people just to have them talk to each other? No. So we have Amazon as a threat. And now we're talking about Ant. Ant is an interesting spinoff from Alibaba. Alibaba, of course, is in many ways the Chinese conglomerate that is like an Amazon. They have a whole host of Amazon-style features. It was started first as an e-commerce site and grew from there. And what ended up spinning out of Alibaba is Ant Financial. Ant Financial today is about 150 or maybe $250 billion today, $250 billion FinTech group in China. And when you look at Ant Financial, they not only have this nice selection of companies. They probably have about 40 or 50 companies. But what I selected here was just a few companies for you to take a look at. Alipay, of course, is probably the most well-known in many ways here in the United States. Alipay pretty much runs any type of transaction for people in China and beyond who are traveling around around the world. My bank is their bank. And you can see that they have instruments to actually assign Chinese citizens things like a credit score, because only about 1/9 of Chinese citizens had a credit score up until a few years ago. Bank of China just wasn't interested in dealing with you if you didn't have a bunch of money. And so the Chinese government said, hey, you know what, we'll give a couple of companies the ability to create a credit score for Chinese citizens. So of course they have that and go the whole way around. Now, I tell you all this because while Ant Financial certainly seems pretty far away, an important thing to remember about Ant Financial is they license their technology and some of their infrastructure to very large banks around the world. And it's not a far stretch to see them perhaps come over here to the United States. In fact, they tried to buy MoneyGram last year in a deal that was ultimately killed, but you could definitely see them as a potential competitor for a number of reasons. Again, it's kind of the highlight, but I want to get to the real meat of what makes Ant Financial special and what makes a digital bank special. And this is, I kind of touched on this in the panel, but in case you missed it, and I'll just share with you the story. There's a fellow named Chris Skinner who's an amazing author in banking. I encourage you to check out Chris Skinner's latest book called Digital Human. Chris has been, he's written probably 15 FinTech-oriented books and banking-oriented books. Really, really smart author. And he also has a daily blog, which is just incredibly useful. It's called like The Financer. Anyway, just Google Chris Skinner blog and you'll find it. The point is, he shares this story. I believe he shared it in Digital Human, the book as well. But Chris has a group of banking executives that meet on pretty much like a monthly basis, kind of like this. And they have different topics they discuss. And in this particular context, Chris had the CEO of Barclays Bank in the UK share his digital transformation initiative. If Barclays, of course, 300-year-old bank, and they went through $1 billion digital transformation multi-year project. We're going to take this old bank and make it digital. How cool is that? And come here and share this case study. So he was sharing a case study and had talked about it. They had achieved, with all this digitization, they achieved something that was probably 2x what they saw before, which is a revenue per FTE metric of what amounts to $400,000 US. And he was quite proud of that change. There was also someone in the audience, or actually on the panel, who ran my bank, the bank that's part of the Ant Financial Group. And Chris asked that fellow, hey, by the way, what does a pure digital bank do in revenue per FTE? We saw a digitized bank, a bank that is bricks and mortar, that has done its best effort to turn digitized. It got to $400,000 in revenue per FTE. What does a pure digital bank do? And Chris said, and the fellow answered, $14 million in US money. So the difference in magnitude, the difference in scale, can we throw that slide up there real quick? It's nice to just look at the difference. It's an incredibly different animal when you're talking about a digitized bank versus a pure digital bank. And as I alluded to earlier, it's not just like, oh, they have branches, so we can cut the branches. It truly is a different level of thinking. And I say this not to necessarily scare us all in the room, but so that it's very important we know who our competition is so we know how to compete against them. If you don't know your competition, then clearly we don't necessarily know how to compete against them. And so, what you start to see from these pure play digital banks is them using their efficiency to their advantage. And oftentimes that can come out by the way of pricing. So, better rates on loans, better rates on checking accounts, lack of fees. They can knock those origination fees and all those other fees that maybe traditional banks sort of live on, they can knock them to the curb. They don't need them. Of course, they like them. They might need them to make their numbers, but they don't need them to make their bank work. And, SoFi, you see it with SoFi Money. Look at this. SoFi Money zeros everywhere for all of the traditional fees that most community banks charge. Everything from foreign transaction fees, foreign ATM fees, all zeros. In fact, the only fees that SoFi has are fees that I call your stupid fees, which is like, you want a paper statement. Maybe you're stupid. You lost your debit card. Well, you're gonna actually you don't pay for the first one, but after that you're gonna pay for it. You want to stop payment on something. Okay, well, maybe you shouldn't have written that check. But all the other fees, they just wipe clean. And this is the difference in the competitive landscape that we are going to see over the next several years. We need to find ways to be as efficient as humanly possible. Now, with the last few minutes here, I'm going to share with you some examples of ways that I've seen community banks kind of cross this chasm. One of the things I want to, and by the way, this is up there because there's only one silver bullet. It's from Coors. The things I'm going to share with you clearly are not the answers to your bank. It's just kind of get the brain flowing here. But there's this idea of crossing this. If only we could get to this other side. If we could get from this world of where our bank operates today to this new world where everything's wonderful and rosy, then we'll be okay. And I would challenge that line of thinking. Once you get to the other side, it is a world of constant change. You are constantly evolving and changing. And I love the discussion that we're having around innovation today, and I don't mean to be so flippant around it in the panel, but it is an indoctrination across your entire bank to understand that our world is always changing. There is no more steady state. It doesn't exist. It doesn't. It's gone. And so the only way for our institutions to live and to grow is to understand that we are in a state of constant change, and everyone needs to kind of get okay with that. And it's very challenging in financial services. So again, I don't mean to minimize it, but it is something huge. Okay, so now some basic little kind of nuggets. This was one I stated on the thing. Everyone's not a target. Okay, we can't just say we're here to make community banking awesome for everyone. You just can't. Operationally, it's not. Community banks just can't afford this. Can't afford it. And so, it used to be, well, we got a branch and we need to serve everybody who comes in. We need to offer them every single product under the door. Yeah, you know what? It's okay to serve everybody. Obviously, I'm not saying don't serve everybody. I'm saying you target specific people. And it's so interesting to me whenever I travel to community banks. I often think of this Swiss Army knife, which, by the way, is a real Swiss Army knife. You can order it on Amazon, and I encourage you, maybe not now, but a little bit later, I encourage you to look it up on Amazon and read the reviews. It's incredible. It's about $3,000, and the reviews are hilarious. But it does about 240 different things, and it does 240 different things kind of okay. It does nothing best in the world. And this is the challenge to community banks out there. What are you going to be best in the world at? And your answer cannot be community banking. Your answer needs to be a little bit more specific than that. Really focus, because the average community bank today has well over 50 different products and services. And by the way, I'm from Kasasa, I'm the product guy, and I will tell you it kills me to say this, because I'm a product guy, I love products. But I included the Kasasa products on there, so I was being fair. Over 50 different products and services, yet every banking conference I go to is say, train your frontline staff to be universal bankers. They have to know everything about everything. Really? How are they going to know everything about everything? Give me a break. This is, and I think about this. Think about that. So one of my favorite, y'all, everybody in here, I'm sure you all remember ING Direct. Everyone here remembers ING Direct, yes? So ING Direct, of course, the orange account here, overseas or here in the States, and it was all about savings, right? That was their deal. And they offered about 3 products over a number of years. They offered a mortgage, they offered a high-end savings account, and ultimately they offered a checking account. They focused, they paid attention, they said, you know what, this is our deal. We're all about savings. If you don't like it, you go bank somewhere else. There's plenty of other banks out there. This is what we're going to do. By the way, what happened to ING Direct? Why doesn't ING Direct exist here in the States? It's because ING ended up in trouble overseas, and they were forced to sell their one profitable division, which was here in the United States. That's the only reason it doesn't exist here. And we got saved. Community banking got saved because they were on a tear. And then Cap One bought them and essentially sat on them and ruined them for a number of years and then decided that they invented cafes. Anyway, I digress. So the point is that we need to focus, because if we don't focus, we don't choose a target and then act accordingly and offer accordingly. Essentially what we end up doing is try to communicate to everyone the most broad way possible. Let's choose a billboard, which is completely untrackable. And then you essentially say things like, hey, are you human? We might have some money stuff. You can't be very specific. You can't target anybody this way. You can't tell people what, you can't listen to them. And essentially you're sending your marketing team in circles and you're wasting all of your money. So, got to target. As I mentioned earlier, there is data out there galore. Choose your target. Again, you can think about the PRISM segmentations. Your advertising agency has access to this data. This data gets refreshed every single year, which is great. I was in a bank the other day, and the CEO said, "Oh, we chose a target. We chose one." And I was like, "Oh, cool." And she had a three-ring binder where she pulled out the data on the target. And I was like, "Awesome. I'm so stoked that you're using data to inform your media buying and your device preference choices and everything else." And she pulls it out and she shows it to me, and it said copyright 2012 on the bottom. iPad came out in 2012. The media you are buying is stale. The targeting you're doing is wrong. You need to use the utmost data. It's available to every banker in this room. It costs nothing. Just do it, use it, make the choice. SoFi is doing, and unfortunately there's a great story here. I don't have time for it. I'm going to keep going. Empathy yielding opportunity is another big one. Now, if you've done consumer journey mapping, I will tell you, if you haven't done it, it's a pain in the butt, but it yields big results. Here's consumer journey mapping in a nutshell. You are trying to take a prospective account holder, let's say a prospective mortgage candidate, and you want to map all of the different things that they hear and they touch and they click, and what do they read about your bank along their process for getting a mortgage. Mortgage, of course, is very complicated, so maybe you could say a checking account. That may be easier to start with. And so, they click, they see this tweet, or they have to fill out this form, and then, we say we need a wet signature, so then they have to come into the branch, and whatever the process is, then ultimately, you can get it down into an Excel sheet or something pretty like this. But what you're doing is you're capturing every single step that consumer sees, hears, touches along their path to accomplishing your goal and their goal. And then you show it back to that target audience. You say, which step here didn't make sense? Which one was fraught with pain? What's the challenge, right? Now, a really simple example of where this can pay dividends is a bank that's overseas in Poland. They had decided they were going to go after small business accounts in Poland. And so they did something really smart. They started first with research. They said, let's get a focus group of some Polish small business owners in, because maybe we don't understand everything that we think we know about small business in Poland. And what they found from the small business owners is about 70% of them at the time were cash-only businesses. And what that meant to them was it's a real challenge getting a bucket full of cash to an ATM late at night. We have to think about staffing issues, we have to think about security issues and everything else. And so the bank that really was just in the formation stages said, thank you very much. If we solve that problem for you about this challenge of getting the cash to the ATM late at night, will you come bank with us? And they said, we think so. And so they called them, they thought about it for the next several weeks. They called the group back and they said, we think we got the answer. Uber had just hit Poland, and they said, what if our app has a little button and the ATM comes to you? Comes to your place of business and you can just put the money right in. And they said, wow, we would absolutely come bank with you. So they did that. They built an ATM into a car and they launched their banking app, and the car would come to them. Now, when this first came out around 2013, most people in our industry, myself included, said, man, that's absolutely crazy. It's going to be, who knows what kind of robberies, what's going to happen here? This is nuts. Well, I'll tell you, within the first few months, IdeaBank had already accomplished their goal for number of deposits, number of checking accounts that was set for the entire year. So they did within the first few months. In fact, they became such a superstar getting small businesses to bank with them that they now have 18 of these cars driving all around Poland. Pretty cool, right? Again, it starts with that empathy. You have to practice the empathy to figure out where the challenge is and then think creatively to solve the challenge. I'm sorry, I'm hitting the button here. Okay, so I'm going to leave you on this one. Marketing is a data sport. Don't let anybody tell you otherwise. Today's marketing is absolutely a data sport. It's not a newspaper ad with a bunch of white dudes in suits and a bad pun. Maybe that joke doesn't play in this room, sorry. It's just not. We don't, thankfully, we've evolved past this. And it's also not taking the data out of your core or your online banking system, whichever is fresher, and marketing to a group of people based upon that data. Because if all you do is take the data from your core or your online banking system, you say, well, we're going to find the people with the balances between $5,000 and $10,000, and we're going to send them a piece of paper that says, hey, bring more money over from JP Morgan Chase. If all you do is that, you only know this about me. You know my name, you know my address. You need to augment your data with additional data to round out the picture. Figure out who else is involved in my family. What other needs might I have? And that is how community banks today are thinking about their marketing and executing on their marketing. So what they're doing is they're moving from this campaign-first level thinking, which is, hey, you know what, in February we're going to talk about houses because that's when we, the bank, really want to open them up mortgages, and then we're going to make a big splash, and then it's going to die down, and then we're going to make another big splash about something else. Which, by the way, campaigns are great. They make noise in the marketplace, very important. But instead of campaign-only sort of thinking, you augment it with a conversation. It's understanding that consumers need things when they need them, not when you want to sell it to them. A great example of this is Amazon, of course. Amazon, believe it or not, it gets cold for one day in Austin, Texas, and I was looking up patio heaters. I didn't buy one, though, and so Amazon sent me an email shortly after saying, hey, here's a bunch of patio heaters that you may not have checked out. Anybody receive an email like this before from Amazon? Yeah. Okay, so when we get this, now, do we shoot it back to Amazon and say, why are you using my data so effectively? No. We're not irritated by it. We're going, wow, that's great. And you know, over 70% of people who have your products and services, 70% of people who have banking products and services say, I wish my bank would use my own data to suggest products that make sense for me. 70%. They're not saying they don't want you to use their data. They're saying don't use my data inappropriately. Use my data to help me. And that's the mix, that's the challenge that I think a lot of community bankers have, is a lot of community banks sit there and go, oh, our clients don't want us to use their data. No, they don't want you to screw up their data. Totally different. And so improving your campaign with a true one-to-one conversation is huge. This is a great illustrative example, but I won't be able to get there. Here's the point. Lauren has what's called a marketing automation platform. A marketing automation platform can only be used when you get your data straight. So first thing you do is get your data straight. Start mapping it appropriately, securitize it, make sure that you know where all your data is. And then you can take advantage of something like a digital asset management system and a marketing automation platform that work together to make one-to-one marketing happen. Without you thinking about it, without your marketing team having to approve every little piece of creative, it gets resized, reformatted appropriately, all the fonts look perfect. Believe it or not, it's freaking magic. And this is available to community banks today. This is not the future. This is not, only available to big guys. This is only available to big guys about 10 years ago, but it's now available to community banks, and it allows you to take advantage of your data and make amazing differences. I'm talking about 3 to 10x differences in your marketing. It's incredible. I looked at some of your websites. I'm not going to name names. Some of your websites are still in the dark ages. Here's the key. Got to get your team to understand, and your CEO, and it's easy for me to say, as I mentioned earlier, it's easy for me to say, hard for you to do, I get it, not trying to be flippant, but we've got to get your C-level organization to understand that investing in your marketing is an annual investment. It is not a 5-year set it and forget it sort of thing. Oh, we do that every 5 years. No. You're talking about search engine optimization investments, you're talking about paid search marketing investments, and then of course your website has to actually look legit, which means it's got to work on all the rectangles as well. Okay, I'm not going to belabor that point too much. So the net of all this is, and I hope, if you leave here with anything, it's that we talked about the hundreds of millions of dollars and billions of dollars that are being invested into these FinTech companies. If you think about it, let's take Movin. So Movin is a neobank from industry thought leader Brett King. It just came out with Bank 4.0, great book. I encourage you to read it. Movin came out from Brett King. It's a neobank, so essentially, it's a digital bank with a bank behind the scenes. CBW Bank is behind the scenes. And came out, I want to say around 2012, 2010. Now, to date, Movin has publicly said, I don't know how many they actually have, but they said, they have about 100,000 active users. To many people in the room, you may look at that and scoff. You may say 100,000 seems like a lot, but really they've had hundreds of millions of dollars of earned media behind them. So why don't they have more? They were supposed to change the banking industry. I'd say we should take a different look at these FinTech companies and understand that Movin and these other companies have had tens of millions, hundreds of millions of dollars head start. They've spent the last 10 years, 8 years, some, 6 years others, refining their data, understanding who they're going to speak to, how they're going to speak to them, what they're going to say, understanding what their customer acquisition cost is, understanding what it takes to actually motivate those customers, understanding every aspect of who those customers are and how they get more of them. They have such a head start on community banks as a whole. We have to make a decision and move forward now. This isn't the kind of thing where we make a decision to make a decision. We don't say, okay, 6 months from now we're going to have a director's meeting and do some trust falls over this and figure out what we should do. Instead, we've got to understand that this is a real moving change to our business. It's already happened. The change has already shifted. And I will tell you, we're not in a good place. This is millennials who say, where is your primary checking account, millennials? Look at community banks. We are below other. I know we're headed to drink here. Hopefully I'm not making all of you drink too heavily. And while I said, so many community banks think of it as just this, it's just that, it's just this. I have to stand up here and use my flippant card one last time. I will tell you, I believe you have 4 steps, and I'll phrase it as it's just, I realize it's a little bit more difficult, but it's just choosing a target. We need to start first with choosing who are we going to go after? Let's be specific about it. Let's get data about who they are, and let's make sure that everyone in our bank, our board, and everybody says that's our future. Then we need to strip away the distractions. That means taking products off the shelf. It doesn't mean kicking people out who are in those products and services. If you're going to go after a certain segment of millennials, you don't kick out all the boomers. This isn't black or white. It's gray, right? But you take away maybe the over 70 checking account. No need to offer or talk about it on the front lines. We don't need to, let's focus our products, focus our intention. Get our data straight. If you don't get your data straight, almost nothing else matters. And notice, by the way, I said the word data in the marketing section, and I must have said it about 50 times. If you leave here and you do anything, please, 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 take the person who's responsible for your data, whether it might be your head of IT or whatever, and join them at the hip with the person who's responsible for your marketing. It is the most important thing that you can do leaving this room. And the last thing is act. You know, you can't get all this other stuff right and not make any decisions. So, you know, empower your team to move forward. There is an absolute opportunity right now for community banks to reimagine who we are and take control of our future. We are the incumbents. We do have a lion's share of consumers who are actively engaged with us. The key is making sure that they stay engaged. And by doing these steps, I believe that we can all get there. Thank you very much. I appreciate time.
All right, that concludes today's sessions. We're going to be moving out to the outside for some drinks. Hopefully you'll take some time to join us and communicate with other bankers and with others in the room. Thanks for being here.